Hello, everybody. My name is Alesh Eisner, and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. Canada's workforce productivity is falling further behind the US. The figure shows Canada's labor productivity, real GDP per hour worked, as a percent of United States levels. It also shows the other G7 countries, the OECD and Euro area averages, and Australia and New Zealand, two small resource-based economies like Canada. The data are from the OECD, which stands for Organization for Economic Cooperation and Development. In 2000, the Canadian workforce was 82% as productive as the US workforce, measured in the terms of real output, quote unquote value added, per hour worked. By 2020, that percentage has dropped off to 77% and is just above the OECD average. So, what contributes to this gap? Number one, the biggest factor is the difference in the amount spent on machines, tools, and technologies, capital, per worker, the capital intensity. As of the first half of 2019, Canadian businesses spent about $13,000 per worker per year on capital, while their US counterparts spent $20,500. Number two is the difference in skill and education. The brain drain of Canadian talent to the US is alive and well, where Canadians move down south, and there's more research universities in the US as well than in Canada. Number three, there's an innovation gap, which also contributes to the lack of business investment. This is seen in both the input of innovation and the output. R&D spending, a proxy for input, represents 2.7% of US GDP, but only 1.6% of Canadian GDP. There's also a culture of innovation and improvement in the US, less so in Canada. Number four is that Canada is home to a relatively large number of small companies, those with less than 500 employees, and comparatively few large businesses, just by virtue of our population. Small businesses are, on average, less productive than larger companies, which the US fosters. And finally, number five, government regulation is stricter in Canada, with more consulting with stakeholders and general government red tape, making new projects take longer. So, what does this mean to Canada? While we may be envious of the higher productivity in the US, there is more to the story. The lesser known truth is that growth over the last few decades has not greatly benefited the average worker. Since 1970, productivity in the US has more than doubled, while workers' wages have increased by just 15%. This decoupling of productivity and wages has occurred across most OECD countries, including Canada. However, it has been more prominent in the US. This is an important consideration for Canada's own policies. For an investor in Canadian companies, the falling further behind the US's productivity is concerning because it will cause Canadian companies to also fall further behind in earnings and therefore eventually stock price. Labor is a large cost in most companies, and thus it should be as productive as possible. So that covers Canada's labor falling behind in productivity compared to the US, what causes it, and how it impacts Canadians. It should be of concern to Canadian investors especially. If you have any requests on what you would like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.